Welcome to ShortView Trading. It's your morning market hit for Monday, 14th of December. What matters today and this week for traders? Well, is the risk reward in this market shifting? And is the Santa Claus rally case brewing? Those are the key questions we need to ask ourselves this trading session, Monday, the 14th of December. And in that respect, Friday's price action was pretty interesting. Markets were weak across the board. European markets all closed lower. US markets were weak throughout the session. The S&P closed down on the day, as did many of the key equity indices over in the States. But having said that, the S&P's price action was resilient into the close, rallying off its low levels and closing only modestly lower. And encouragingly as well for the bulls, overnight in Asian price action this Monday morning, the US futures have done pretty well, retracing their losses from the back end of last week. But with Friday's weakness, many of our models are much lower now. They're off their sell levels, they're neutral, they're moving towards buy. Indeed, we update these every day in the daily rag, which is available to subscribers via the website. We also update our 1 to 2 week views on equity index futures in that publication. But I wanted to highlight a couple of key charts to you today, including the put to call ratio you can see in front of you now. This is a great example of these models all moving lower. As you can see, the 3-day smoothed index that we like to look at has moved sharply lower from its sell levels at the back end of last week. And whilst not yet on buy, it is certainly at a sort of neutral type of level relative to recent history. Other examples include our technical scoring systems, which you can see in front of you now. The S&P 500 technical scoring system has also moved sharply lower. It's now neutral. The NASDAQ 100, same story, and even a bit closer to buy. And indeed, the risk appetite models are similar. So the models are shifting, and of course, the pattern of December so far has worked pretty well this month. Bit of strength in the first few trading sessions, some sogginess into the middle of the month, and then, of course, the typical pattern is a good 2 final weeks in December, the real Santa Claus rally. And, of course, today is the 10th trading session of the month, and it's typically the 10th, 11th, 12th that the S&P makes its low for the month. So the case for the Santa rally is brewing. The risk reward, it seems, is shifting. For a full update on how we're playing this, please see today's Daily Rag, available to subscribers via the website. So what are we watching this week? Well, there's lots going on. Firstly, in terms of political type events, Brexit negotiations are continuing. The deadline is extended once again. Added to that, in the US Congress, there's a bipartisan bill that's coming up again this Monday. Another push to try and get a stimulus package through. That, of course, is critical for markets. And then, of course, finally, in terms of politics, there's the lockdown chat, a review in the UK, for example. Germany's just gone into hard lockdown once again. Secondly, there's an awful lot of central bank action this week. The Fed is the key one on Wednesday, with a press conference following on from the announcement of the Fed decision. Added to that, we've got the Bank of England and the Bank of Japan this week, and a few other smaller central banks. And of course, as always, we're watching price action across a whole range of assets, including Bitcoin, 10-year bond yields, and of course the equity indices across the globe. And then of course, finally, there's lots of macro data over the course of this week, including US retail sales, flash PMIs, and German IFO. So that's it from us. That's your morning market hit for Monday, 14th of December. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.